Debt to income is a big factor when it comes to your LLPA or add-on to your rate. All right, if you have a better debt to income ratio, your rate could be substantially better because it assesses risk. The more you put down, or I say, the more skin you got in the game, you're gonna have a better rate. Right? The most important one, or I should say it used to be the most important, but then it became a less indicator of default. Nowadays, it is embarrassing if you don't have above a 740 credit score because everything can be on auto debit. How the hell you miss a payment? Right? The most common factors of bad credit would be like you turn in a lease and the guys at this car shop don't tell you that you owe some interest. It could be like 28 bucks. Collections are a big one. LLPA, okay? Loan level, so we're doing levels, pricing adjuster, all right? This is how rate is determined. You will have a base rate, okay? That is, if you have a bank, that's their cost of funds. That's what they're gonna buy money from the Federal Reserve, you know, get their margin in there, and also increase rate accordingly to a set. Think about it. Who are you gonna give money to? Your friend that has a job and is trustworthy? Or your friend that's a junkie, going out drinking every night? Who's gonna pay back? That's assessing risk. You do it every day, you just don't realize it. Right? Banks do the same thing. Just say, oh, my rate's bad. I'm like, yeah, because you're high risk. You're like, oh, my rate's good. It's like, yeah, we like you. Like, you got all the good parameters, we call these parameters, that makes you a good loan, right? Because of the LLPAs. Everyone knows a base rate, especially if you're on a balance sheet or a portfolio. Another LLPA that they hit you with, that they can hit you with, is what kind of home are you buying? You're buying a condo, you're buying a townhome, single family home, multi-unit, or primary, secondary, or investment property. So generally speaking, a second home or investment property is gonna have a higher rate. Why? Because they're assessing risk. If you're gonna default on a home, what do you think you're gonna default on first? Your primary home where your kids live and go to school? The tornado already took it out anyway, all right? I hope you have insurance. So that's definitely something to keep in mind. Anybody can quote a rate. It's very simple, but you gotta keep in mind LLPAs. They're out there. There's some programs that say there's no LLPA hits, all right? We'll dive into that in another video, but for all intents and purposes, watch out for LLPAs. How much are you putting down? Or how much skin you got in the game? What's your debt to income? Do you have a lot of debt versus you don't make that much money, you make a lot of money, you still have a lot of debt. Either way, what kind of home are you buying? Okay, LLPAs are a factor in 99.9% of loans. Keep in mind, mortgage bro science. I always say mortgage.